Good morning, guys, and welcome to today's edition of the London Session Open. Today is June 1st, 2020, and it's 10 minutes until 10 a.m. in London when we're doing this market update. We're going to take a look at the markets that we shoot this time of the day. We're going to spend about 10 minutes checking things out and look at different technical levels and different news that are driving the markets today. Okay, so let's just begin, and we're going to begin. I actually prepared some headlines today. So stock market saw quite a nice little ending last week. There's US-China trade tensions eased a bit. People were anticipating President Trump to come out hard against China on Friday, and obviously there was some comments about it, but it wasn't as bad as people thought. So people don't really see the US and China trade tensions picking up right now. That saw a nice little boost to the markets as well. Hong Kong Stock Exchange is up quite a bit today, and the breakdown we saw on the onset of the crisis here, political situation, with the new legislation enforced in Hong Kong by the Chinese central government, has now eased. Now we did see, though, I'm going to look at it in a few minutes, how the Dow Jones slipped a bit on the riots that are happening in the US and the protests. I think there's some protests in, I think, some 40 cities or so across the US. That is definitely influencing the mood a bit, but not by much. We're going to talk a bit about that. So what's on the deck for today then? Well, you have the US ISM figure coming out this afternoon at 3 p.m. London time, and the prior reading was at 41.5. For now, people anticipate it to be at 43. If you look at data like how people are using Google and the energy consumption in the US, is actually still relatively sort of unchanged, and that's really what this ISM number is showing. It's only if that number will come in much weaker, then I think it's going to ruin the mood, because what people are focusing on now is the fourth point here is the easing. So you have easing in the UK, Turkey, parts of Australia, Russia and Moscow. You have the Netherlands, France. You also have Portugal. And you probably have, I think, even India and different places as well. So you are seeing easing, and that's really what people are focusing on as well. If you look at the number of how the GDP growth has changed, also debt to GDP has changed in the US, then that has risen with some 10% over the last few months. And if you look at the Fed balance sheet, it increased from about 4 trillion up until about 7 trillion in the last couple of weeks. So the balance sheet of the Federal Reserve has ballooned by 75%. And all of that is influencing financial markets, and which tend to move ahead of the real economy. So you can't look out the window and say, oh, look, my neighbor is home, he's not working today, he's enjoying the sun, and use that as an argument to trade the markets, because the market is going up now because they think, oh, well, that guy won't be enjoying the sun in 4 weeks' time. As an example, nurseries were open up in the UK from today, so productivity in the UK alone will increase. Anybody with a child at home can tell you that that's the case, as long as they send the child to school or to nursery. So things are going in the right direction, and that's really what's driving the market. But of course, you want to keep an eye on the US-China situation, and it's not just US and China, it's the UK against China, it's Australia against China, it's everybody there, and the situation there. The UK opened up for some 3 million people to potentially be able to come from China or from Hong Kong to the UK, and Hong Kong itself has some 7 billion people, so it's a significant amount of people. In the next 24 hours as well, you're going to have the RBA rate meeting. The Aussie dollar is one of the top performers today, so you want to keep an eye on that. And then obviously later in the week, non-farm payrolls and the ECB rate meeting. But we'll talk more about that when that comes up. Let's take a look at the markets now, and let's begin with the euro. So we had some good success with the euro. So I said on a break to this high here of 110.39, we can go upwards. We reached the first target. That's a good little spot to book 50%, if not 75% of the position. Longer term, as you know, we're dealing with a rectangle, and I said don't despair. People always despair when it's not going anywhere, but then when you have the breakout, they miss out because they stopped looking at the markets. Use alerts. Most brokers will give you alert system where you can get an email or a ping or any sort of message to get you back And that's exactly what one should have done here. Anyway, we still have that target difference between high and low of this rectangle, suggests we can go up to 112.84. And in the very short term, if we go back down to 111, 111.06, I think people are going to start to build positions again, and we're going to be buying here. Stops, at least initially, is going to go on 130.47. But the quality of buying this dip is not the same as the quality of buying that breakout. You need to understand that. GBP versus the USD is also going up a bit. It's a bit the difficult situation from a purely technical perspective here. It's definitely a bit bullish. I don't disagree with that, but I wouldn't get too excited about this. I think, of course, trade above maybe 122 and 122.84. You can pick your level depending on if you're short-term or long-term trader. We are bullish about these two levels, and I think we can go a bit higher, but I wouldn't be allocating any money here. I mean, look at something like the Aussie dollar, like a beautiful, nice uptrend, right? As simple as it can get. Last week, I was telling my clients that down here, people are going to be buying. In fact, I've been telling people, my clients for quite some time here, that the trend is up when you should be buying. This is your easy, nice little sweet uptrend. That's where I will be focusing on. Of course, with the euro, now you have a nice little uptrend here as well, so you can focus on that as well. But look at something like GBP USD. It's not going, doesn't have a strong trend. It's very easy to lose money in those situations. This is the dollar yen. Dollar yen, creating yourself a low here on May 7th. You had another low here on April 14th. Then you have a double low here. You got a low here on April 13th or May 13th. And then on May 29th, you have another low. This is starting to look more and more like an inverse head and shoulders. And I would be happy to be bullish on a break to 108.09. Very straightforward. That goes up, things turn bullish. Looking at gold, the gold is looking very good as well. So a few days ago, a few weeks ago, we looked to buy here. The market went against us, almost took out that trend defining level, almost get us stopped out. That position now is above water. We were actually in a bit of profit. I said this morning to my clients, let's switch that off. Let's close that position. And now what we're looking at today is a pullback maybe to 17.21. I think that will be key down here. That's where people are going to be buying that didn't buy. And if you did buy on the other dip, remember we said we could also buy here at 17.12. I think maybe you can book a better profit up here, maybe 50%. What you do, of course, is up to you, but we are dealing with a bit of a sluggish uptrend. And unless stock markets come down tumbling, it can continue to be slightly sluggish. Ultimately, though, I think we can go up to 17.65, and then we still have that big level, which is 1,800. Crude oil markets, this is the June future, and we finally had that breakout, right? So we're trading sideways, we pushed upwards here, when we're just below 36. So technically, we had that breakout. It's perfectly fine now to buy if you would like to do that. Stop loss, we probably need to go down here at 32. 36. If you don't want to be too close to the price action, you're looking at 30.86. Now we haven't really had that push, so what I would do here personally is I would wait for another push, take out last week's high at 36.02. That gets me excited. That is where I would look to get involved. The benefit of that is that you have a confirmed on the confirmed breakout, right? What's the bad thing with that though? Your risk reward ratio is gonna turn pull, but is sufficient. The alternative is if we don't take out that, we can have a bit of a pullback and then we go upwards, okay? German DAX is looking good overall. A few weeks ago, we said look to buy here. That went really good. Up here was a very good opportunity to book profits this morning, but also already on May 28th, 50% or 75%. I was long the Dow, I booked 100%. And then if we go back here in the German DAX to 11,553, I think people are going to be buying. So you might say, what about the riots in the US and all of that? I don't think it's going to matter too much from an economic perspective. The reason for that is that most of the US economy was already shut down to begin with. And now, because it's already shut down, of course, because of the destruction, you will need to rebuild things and shops. So I guess not going to be able to bounce back as easily. But I think the key point here is that the economy was already closed. So it's not necessarily going to influence things massively from an economic point of view. At least not right now. Because I think what's going to be interesting is how is this going to influence the election? That is really important now, what President Trump does going forward. And if he can use this to his advantage and give the people what they want and maybe bring in those reforms that the people want, then he can be a big winner. On the other hand, if he goes against that, it might not be as good. I'm not really sure because I'm not based in the US and I don't know exactly what's going on and what they think about the situation, but this is the way I'm looking at it from an outsider. So that's going to be interesting to see how things work out over the next few days. I personally think that there will be some resolution to it within the next week or so. I think things will calm down. It's either going to be peacefully with negotiations or just brutally just pushing the army, and then literally people won't be going out and there won't be no protest. But it's going to be shown in the voting maybe in November. So if President Trump would be removed, then that would obviously be a challenge for the US stock markets, because he's very pro-business. As you know, he cut taxes massively and he's quite lax around that. Want to help business to get going, so that can have a bit of a negative influence on stock markets and capital owners. So, but we can worry about that later. Again, from a purely technical perspective, the trend is bullish here in the DAX. If you look at something like the S&P 500, the trend as well is bullish. As you know, we talked about the breakout, we talked about the dips here, and things have been working out fairly good. Is it going with light speed to the upside? Definitely not. And it's like that sometimes, but the trend remains bullish for now. And as a little treat, this is your NASDAQ 100. Look at that one. What a beauty. We're effectively 2.5% from its 2020 high. You know what's going to happen here? I think it's going to go up to the high, and then it's going to trade above the high, and then we might come back down again. Is it the time to buy when we reach that high? Probably not. Definitely not. I don't think so. But we had a massive move here. Massive move, 44%. Congratulations if you managed to capitalize on that. And even the bears, they had a massive year as well, because we're down with 31%. The only one that didn't necessarily do too good if you bought at the very high. But even if you bought at the very high, yeah, you lost some time, but you've been okay. Unfortunately, though, what most people do is that they buy at the high and then they sell at the bottom. That's what we do as humans. We're terrible investors, humans, and that's just the way it works. And I'm laughing now because it's actually very typical. Even if you invest, this is quite interesting. There are people, if you invest with not the best of the best top hedge funds, some of them, what happens is that, well, actually not top hedge funds, but mutual funds. There's some mutual funds that've been doing very, very good for a long period of time. And they showed that the average investor still didn't make money, even if the indexes, even if the mutual fund itself made money. And you know why? Because people have the habit, they go into these funds when, they've done really good. They've done really good in the last 12 months, really good in the last 2 years. They buy at that point, and then they just hold it for 2-3 weeks or whatever, and the market pulls back, which needs to happen. And then they go out, and then the market goes up again, and then they go in. I think what people don't have sometimes, especially in investing, is patience. And that is why they lose out. And then secondly, they don't really know what they're doing, because it's on a flick of a button, you click buy or sell, right? It's super easy. So a lot of people think that, it's super easy. And price can only go up or down, right? So it's a 50-50 chance to begin with. So I think people get inspired by that, but they don't really realize afterwards how difficult it is to hold positions. Anyway, I think we need to go now. It's 10:03, and just gonna check out the site. Gonna say good morning to you guys. So if you're new to this, we do this every day, Monday to Friday, on investingq.com and on the ATFX YouTube channel. The best thing is just to subscribe to us. You get that notification. In the chat box, we have Maurizio. Good morning to you, sir. We have True Invention as well, and we have Antonio. Did you see the handle of US stopping some US soy, China stopping some US soy imports? No, I didn't follow that. I don't really trade the soft commodities too much, or at all, to be honest. So no, I didn't really see that. Okay, good. Unfortunately, guys, I need to leave you. As always, if you want to know more about the markets, come back here tomorrow, same time, and we'll take a look at it together. Hopefully, we have some more time as well. We have this Investing Cube premium course, and it's very straightforward. It's about 4 hours of my content, and you get that. You can either buy the course or you can get it for free with an ATFX account. As well, we do offer coaching, so you can talk with me or with any of the other analysts here at investingcube.com, and you can either buy the sessions yourself, or you can just apply for them for, you can actually get 2 hours included with an ATFX account. So it's quite straightforward. If you want to check this out, here are the links. See you guys on, actually, on Tuesday. I'm not gonna be back. I'm off tomorrow, but I will be back on Wednesday. So that's the next time to see me here. All right, guys, have a beautiful day and a good week, and hopefully see you guys on Wednesday. Thank you and bye-bye.